But we begin tonight with the story that shocked investors around the world and rattled the bond market. Bill Gross, the bond king, the man who could move markets and was often compared to legendary Fidelity Magellan fund manager Peter Lynch, is leaving PIMCO, the firm he founded more than 40 years ago. He's heading to Janus Capital Group, where he'll manage a new bond fund for the much smaller firm. Now, Gross's sudden exit sparked a knee-jerk sell-off in the Treasury market. PIMCO's closed-end funds were hit hard. The PIMCO Total Return ETF fell slightly, and Morningstar placed all rated PIMCO funds, including the flagship Total Return Fund, under review. But at Janus Capital, its stock soared 40%. And Allianz, PIMCO's parent company, was down 6% in Germany. For many investors, PIMCO funds are a mainstay of 401k and retirement plans. So who is Bill Gross? Why is he so important? And how did he get to the point of leaving the firm he founded? Jane Wells has more.
You get that Washington package.
Bill Gross has been king of the world, at least the bond world, making investors oodles of money in the 32 years since he created PIMCO, building up a company with $2 trillion in assets, starting the largest bond fund on the planet, averaging nearly 8% annual returns since inception, and turning this former Navy officer into a billionaire.
But he's a true giant in the industry. He's a true legend.
But this has not been a legendary year.
Mohamed Al-Arian, a familiar face to NBR viewers, is stepping down as CEO and co-chief investment officer at PIMCO.
In January, the man who helped run PIMCO, Gross's heir apparent, abruptly left.
There's no clash of personalities here. We got along real well.
Investors didn't like it and began pulling out money. Personnel changes included rehiring former portfolio manager Paul McCauley, and parent company Allianz at least publicly continued to stand by their man.
Is Bill Gross past his sell-by date?
I think Bill is working hard on the recovery.
But behind the scenes, there was talk of a brewing revolt. And then this week, the launch of an SEC investigation.
Regulators are reportedly investigating whether bond giant PIMCO artificially pumped up the returns of one of its popular funds.
Finally, the man who once turned $200 into 10 grand at a blackjack table in Vegas decided to fold him at the company he built.
I don't shock easily, but I was surely shocked when I heard that basically as soon as I got in the office about 8:30 this morning.
Bill Gross said in a statement it's time for him to focus on the pure aspects of portfolio management at a smaller firm. He has chosen Denver-based Janus, where the king hopes to regain his crown. For Nightly Business Report, Jane Wells, Los Angeles.
Joining us now to talk more about Bill Gross and what his departure means for the bond industry, for PIMCO, and for investors wondering what to do with their money are Michael Herbst, Director of Management Research at Morningstar, and Tim Spies. He's partner and personal wealth advisor at Eisner Ampner. Welcome to both of you. Michael, nice to see you again. How crippling is this to PIMCO, or is it at all?
Bill Gross obviously has had a huge impact and a huge imprint on PIMCO's investment strategy across all of its funds. But this is far from a one-man show. The research depth that he has at his disposal and that his successors will have at their disposal is virtually unparalleled in the bond industry.
Tim, do you agree with that? I know you were getting a lot of calls from your clients today asking, what should I do with my PIMCO funds? What were you telling them?
Well, first, they have to do due diligence on where they would go as far as where to place it. But the other matter is that it's very likely or possible that the continued outflows could occur. Almost $63 billion has come out in the last, say, 16 months from the PIMCO funds.
You know, Michael, you say that it's got a deep bench, that they've got great research capabilities, but you all at Morningstar put not just PIMCO Total Return Gross's main fund on watch. You put all the funds that you rate on watch. Why did you do it?
Well, that reflects the imprint and the impact that Bill Gross has had on the firm and on the investment processes that carry across multiple funds. What we're focusing on here will be the formal repercussions of his departure. We expect further news from PIMCO later today on his successor. But there's also going to be some unofficial or less formal repercussions, too, in terms of the mix of responsibilities, how the investment process might get adjusted in the wake of his departure, and what day-to-day execution of that strategy looks like.
You know, Tim, bond investors are a very conservative bunch of people. And while all of this uncertainty is hanging over PIMCO, aren't you better off just taking your money out of PIMCO and parking it someplace else?
That could be true, but we shouldn't forget that over the past 10 years, PIMCO's returned 6% in their fixed income funds compared to, say, the benchmark of around 1.5. So they still have a very compelling story to tell. They have a lot of talent, although any investor should go through their own due diligence process, their aversion to risk, their investment horizon, understand the duration. There's a whole process that an investor should consider whether they stay or leave PIMCO.
You know, Michael, I heard you on your Morningstar broadcast earlier today that inevitably, you said, a level of chaos ensues when something like this happens at a company like PIMCO. This is a company that has today lost its voice, its principal, the face of the company, and it has lost its leader.
Well, it's certainly lost its most public voice, but there's plenty of people that have supported Bill Gross over the years, including the deputy CIOs that were named earlier this year when Mohamed El-Erian left. What we are trying to do is assess what the impact on those people will be. That is, ultimately, this is a group of people making decisions with each other day in and day out. Changes to how that occurs could be material for the funds. So we are reassessing our views once we have a little bit more information and can apply our judgment to what the new reality will be.
Tim, as Mike said a moment ago, Bill Gross has a great track record. You said the same thing. Does it make sense to follow him to the new fund, to Janus? Well, would you recommend that to your clients?
We're not recommending any funds. We're in the business of helping our clients conduct due diligence, but I would say an infrastructure is going to need to be built there that would rival amongst the best funds in the world. Remember, PIMCO is amongst the largest in the world. Janus has not quite attained that status yet.
Yeah, but Bill Gross is the bond king.
True, but as you've heard the other commentators say, Mr. Gross had a deep staff and a deep bench.
Michael, final question here. One of the leading contenders to succeed Mr. Gross is Dan Ivascyn. He won your Morningstar Fixed Income Manager of the Year award. We don't know whether he's going to step in at total return, but he very well might. Quickly, what do you know about him?
Dan Ivascyn has been responsible for heading up the mortgage effort at PIMCO, which touches most areas of the firm and actually gives him a great lens into some of the macroeconomic considerations that Bill Gross is rightfully so well known for. Dan Ivascyn is well regarded by past and current colleagues as well. And should he step into that role with the other folks supporting him in their existing roles, that brings a level of stability to the funds that would have us essentially urging investors to catch their breath for a moment rather than leap to any immediate decisions.
All right.
That said, we'll be looking to see how this unfolds in coming weeks.
Gentlemen, thank you very much. Tim Spiess of Eisner Amper, Michael Herbst at Morningstar.